This holiday season, we're helping you catch up on all your favorite FreightWaves TV shows. You can now watch the latest freight news, market insights, and in-depth discussions on your preferred streaming platform. As our gift to you, if you purchase a FreightWaves Live Atlanta ticket from now through December 18th, you'll receive a free Apple TV 4K. Download the FreightWaves TV app today and you'll see freight has never looked this good.
It's Tuesday, and that means another episode of FreightWaves Now. I'm your host, Anthony Smith, and we have another amazing lineup for you today. We have Luke Falasca talking to the brokers today. We have John Kingston in the office with an oil update. But first, our very own Zach Strickland with a carrier update sponsored by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update sponsored by PowerFleet. So today we continue to see capacity tighten across the country. I've got the map pulled up behind us. The blue areas, obviously the higher rejection rates. The white areas, the lower the rejection rates. Down here we're hovering right around 8% in general with outbound tender rejections. So capacity hovering right in that same area, slight tightness throughout the country. Up here in this chart here we see strong increases throughout the Dakotas, as well as Joplin, Missouri, Wilmington, North Carolina. These markets here, not huge, but they are seeing some anomalous increases, over 1 standard deviation jump up on the tender rejection rate. So if you are operating in the Dakotas today, need to make aware that you need to charge for that, maybe even more so than you do. Normally it's a very expensive area to operate out of anyway, but today you might be able to get a few more dollars right before the Christmas holiday, buy another extra present or two for your daughter. So Joplin, Missouri, I want to focus on that one. That's one of the larger areas, right around Kansas City, the Missouri area. We had a lot of disruption there earlier in the spring with all the floods and the spring flooding. I want to hone in on that one today a little bit. But first off, everything going up across the board in terms of length of hauls throughout the country. So anything going any distance whatsoever, capacity's tightening throughout as drivers continue to come offline or they shorten their exposure to the broader market. Short haul rejection rates up as well, so that's a big indicator that we are seeing tightness throughout the market, especially during the Christmas time. So there's nobody that's safe from this tightness throughout the country today. Weighted rejection index here. Columbus still showing up, Harrisburg, anything around Newark, New Jersey, right in that area, upper part of Minneapolis. This is probably what's causing a lot of that North Dakota tightness up here in this area here. But Joplin, Missouri, the area I want to focus on more in detail today. Notice Spokane and Los Angeles still continue to show increasing tightness throughout the country. So Joplin, Missouri, through all modes, reefer and dry van rejection rates all going up. 43% on reefer, 13.65 on dry van. So if you are looking to operate in this area today, you definitely need to charge more for it. And something that you need to know behind the scenes here, long haul rejection rates are really what's driving a lot of this capacity tightness along with reefer. So if you are a reefer carrier and we are looking at long haul runs, that means that you're not necessarily going to stay within that region. So if you're trying to get home time for Christmas, not an option for you. But if you are willing to drive, Joplin, Missouri may be the solution for you to make a little bit extra money. Might miss Christmas though, because that's an 800-mile plus run, so you may not be able to get back in time. But you will be able to pay for that LOL surprise doll that's going so fast. So something I wanted to point out, if you looked at the weighted rejection index, you would have noticed that Phoenix, Arizona actually had a light blue indicator today. Now, something that's been happening with Phoenix, which is a traditional backhaul market you don't want to go into, an increasing amount of outbound volumes over the past year or so. 65% increase in outbound volume since this time last year, only a 44% in inbound volume since this time last year. So all of that freight that came into the country for the pull forward for the tariffs was loaded from Ontario, Los Angeles, got pushed into Stockton, Phoenix. A lot of that freight is now moving across the country now with more frequency. So a lot more volume coming out of the Phoenix market here this winter. So that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi everyone, I'm Luke and I'm bringing you your broker update for today. We're going to be taking a look at a few of the different markets today in terms of tender rejections. A lot of them are heating up, especially as we get closer to Christmas. Overall, tender rejections are up in the country, but we're going to be honing in on Louisville, Kentucky. So let's take a look. Drive and outbound tender rejections out of Louisville, Kentucky. We've seen this big rise up here all the way to Thanksgiving, so there's not really much of a surprise there, but then we kind of dipped off and held our volume, and then we had a massive spike that we saw from yesterday to today. All right, so that is going to apply a lot of upward pressure on spot market rates. So as you continue to see these, we'll see if this continues to push up further than where it already is. That's a massive spike. We haven't seen anything close to that, not even during the Thanksgiving push. So if you're moving any freight out of Louisville, Kentucky today on a drive-in, be sure to increase your rates far above spot market bids. Don't keep the same rates as you were doing yesterday or the day before. The market has tightened up, so you're going to need that extra money there that you charge your shippers to cover your margin, to protect your margin from the premium that carriers are going to ask for. So let's take a look at the volume levels out of Louisville this year. So we're going to be taking a look. This is we're beginning right here. So this is year-to-date chart. So we've seen these volume levels. We see a couple of dips here around some of the holidays, but for the most part, you see an upward trend in volumes throughout the year, and we're actually beginning to continually hit high points this year. So so if we take a look, I mean, we started out volume levels in the beginning in January last year a little above that 50 mark, and we're already up to 58. So we've seen a pretty big increase, well over 10% increase, and we're still making new highs. We saw a little dip here happen shortly after the Thanksgiving push, but we're going right back up. So that's a big indicator that there is volume there. There's freight that needs to get moved. All right, so if your shippers say they don't have freight for you today, don't listen to them, call them, let them know that you can get their freight moved. It's there, so go ahead and make your money moving your freight out of Louisville today. To stay on Louisville too, we've got some of the highest rejection lanes out of Louisville today. Okay, so at the top we've got Louisville to Bloomington. That is going to be a short haul run. Number two, we've got Louisville to Jefferson City, Missouri. So that is sitting a little over 13.5% rejection rate. That's almost a 30% increase day over day. That's a massive increase. We're going to take a look at that and look at some of the rates on that lane as well, especially since that one has increased far above where any of the other ones are. So if you can see over here on this chart on the right, this is the rejection lane from Louisville to Jefferson City. Now look at this massive spike. We hit a bottom here, it looks like on the 9th of December, and we started rising, leveled off a little bit around 10%. That 10% threshold is typically that sweet spot for once you get above 10%, you're really starting to push above contracted rates. That's a good indicator for where spot market rates are going. And then we saw this massive push yesterday all the way up to over 13.5%. So again, increase your bids. If you're moving anything on that lane, you're going to see that you're going to see a lot of premium from carriers start asking. So increase your bids to protect that margin. Looking at our rate forecasting tool on that same lane here, so we're looking just under 400 miles. We'll take a look at the median price here. So keep in mind this is our line haul price, so no fuel is added in. So if you do want your all-in rate, make sure you add your fuel surcharge to it. But we're sitting right about $2.27 right now in that lane, and if you look at our week out forecast, it's going to be pushing up to around 248. So there is going to be a lot of upward pressure on this lane, and then it looks like we'll soften up once the new year comes around. So if you're moving any freight on this lane, get it covered today, all right, because there's going to be continued upward pressure on that lane. And also let us know in the comments below if you have any horror stories from moving freight around the holidays. We love to hear that stuff. I'm Luke, and that's your broker update for today.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
John Kingston for FreightWaves Now, and it's Tuesday, and why is that relevant? Tuesday's relevant because on Monday evening, of course, the Department of Energy Information Administration comes out with their weekly retail diesel price average. That is the basis for most fuel surcharges. As you can see, 3.046, that was down about 0.3 of a cent, so hardly any sort of move. But it is significant, and I'll tell you why. The price of diesel, there's no doubt about it, is starting to move higher. The the price on the CME yesterday closed above $2 a gallon for the first time since September. On Tuesday here today, it's headed to a settlement above $2 a gallon. Again, that will be only the second time, or the first time since May, that it's closed above $2 a gallon on consecutive days. As a result of that, what you're going to have is a situation in which the price of diesel that's being passed through on the fuel surcharge is going to be kind of stuck at this lower level, and meanwhile the overall price is going to be higher. But you know, physical markets don't all follow the price on the CME. That CME price is kind of the initial building block for establishing the price of diesel, but that's not the end all. In Chicago, you've had a decline in the physical market of about 10 cents just in yesterday. Let's take a look at that market. You can see this. This is the wholesale rack price of ultra-low sulfur diesel in Chicago. You can see that it's already reflected that big drop in the price of diesel. You know, you're not going to move your trucks around just to get the lower number, but the reality is that you're going to maybe get a little break if you're buying diesel in the Chicago area, Milwaukee, Indianapolis, Iowa. Now let's talk about IMO 2020, because you know we're getting to that time. It should have been affecting the market. So far it hasn't. I tend to look at the price of diesel relative to the price of crude as the really key factor there. And you're just not seeing any movement in that spread. The relationship between diesel and the price of crude has stayed pretty much steady. At the same time, you look at this is the price of diesel overall bottoming out in August. This is the rack price, the wholesale rack price, and you see it's moved up to about $2.06. From down here, it was closer to below $1.90. Now, is that IMO 2020 having an impact? I'm not really certain about that. I tend to view the spread between the two as being the thing that's most indicative and most important. We're not seeing that movement yet, but it's possible that the overall lift in diesel prices that we've seen the past couple of weeks may be in fact related to IMO 2020. So this is a significant time. We've definitely tacked on a lot of money, you know, 5 to 10 cents in the price of diesel over the last 2 weeks. I don't know if it's IMO 2020. I do know that the markets are higher. I do know that inventories are tight, even though they built last week. So, you know, we're at the end of the year here. Last year at this time, the price was plunging. At this time this year, the price is rising. So it's a significant difference. We'll keep our eye on that on FreightWaves. For FreightWaves Now, I'm John Kingston.
FreightWaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at FreightWaves want to help. FreightWaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site since it went live on Monday. If you're looking for employment or have a job to post, head to freightwaves.careers.
And that's going to do for this Tuesday edition of FreightWaves Now. As always, thanks so much for tuning in. But the content doesn't stop here. We're available on all your favorite social media platforms, and we recently launched our FreightWaves TV. So check us out on all your favorite streaming networks as well, including Apple TV. We'll see you on the next episode.
One of the big things that stands out about FreightWaves Live for this conference is that it's bringing in top-notch speakers. It's having quick, concise engagements. There's a lot to like here.
The demo format for FreightWaves has been great. It's a little stressful, but if you can't get your message across in 7 minutes, then you're not doing it right.
It's the place to be for any tech company in this space. All the different providers and investors and people building the tech companies. So I love being part of that community.